All right. Welcome to HOA Insights, Common Sense for Common Areas. I'm Jen Johnson, and I'll be serving as the MC for our third live stream episode. We're excited to have you join us. Before I turn the program over to our hosts, Robert Nordland, Julie Adaman, and Kevin Davis, we'd like to get to know our audience a little better. You can respond to the questions in the chat, and I will see them over here. All right. Here is our first question. What city and state are you watching from? All right. For those of us joining, we're doing what city and state are you watching from? Awesome. And let's go to our next question. Awesome. We've got Georgia, Illinois, California. Excellent. Lovely. All right. Next question. What is your role with respect to your association governed community? Are you a volunteer board member, professional manager, or something else? Awesome. We've still got people answering our last question. We've got people all over the country. I love it. Washington, Colorado, Oregon, Arizona. Fantastic. All right. We've got some presidents here. Welcome. Welcome. Hi, Edgar. We've got a board president. Fantastic. Board member and something else. All right. All right. Little mystery. Board of directors, president. Fantastic. Volunteer board member. Treasurer, volunteer, part-time. Oh, fantastic. Lots of hats. I see everyone's wearing lots of hats. Fantastic. Thank you for those answers. I'm going to move us on to our third question. This is going to get us ready for our episode here. All right. On a scale of 1 to 5, how familiar are you with the Corporate Transparency Act? 5 being very, very familiar, 1 being, I have no clue what the heck that is. Fantastic. I see we've got a lot of treasurers here. We're very interested. All right. We got a 1 and a 3. All right. Some 2s. I got a 6. We're off the scale. We're feeling very comfy. 4s, 2s, 1s, 3. Okay, fantastic. Done and filled the paperwork. All right. Fantastic. All right. And then our second subject that we're going to cover later in the episode is our next question. All right. On a scale of 1 to 5, how familiar are you with Fannie Mae? All right. Another 6. All right, friends, we're funky. We're having a good time. I love it. 2, 4. All right. We're going to get some good information out to you. All right, everyone. Thank you so much. All righty. And we're going to go ahead and get started. Thank you so much for all of the responses.
HOA Insights, Common Sense for Common Areas, exists to help all 2 million volunteer board members nationwide have the right information at the right time to make the right decisions for their future. This podcast is sponsored by 4 companies that care about board members: Association Insights and Marketplace, Association Reserves, Community Financials, and Kevin Davis Insurance Services. You'll find links to their websites and social media in the show notes.
All right. Thank you so much for joining us, everyone. We're going to go ahead and bring our hosts in.
Julie, are we leaving Kevin out in the cold?
I don't know. Where'd Kevin go? It's just not
I don't
right.
know. We
He
had him
was
a few
cold.
moments ago. Oh,
Looks
Yeah.
like
that's not
Kevin's going
Kevin.
to pop back in. I am not Kevin. He's going to pop back in a little later.
You got more hair than Kevin.
Hey, Julie, what do you say we get started?
Yeah, let's do it.
Kevin was having some microphone problems before we launched the episode here today, so we're trusting that the tech team is working on getting him going. But welcome again to HOA Insights, Common Sense for Common Areas. I'm Robert Nordland, and this is episode number 74, where I'm here live with regular co-hosts Julie Adaman and hopefully Kevin Davis in just a moment. And we like to keep this podcast current, providing you with some valuable insights to help you confidently care for your association and confidently lead it fairly and responsibly into the future. At this time in our industry, we are facing a significant government-imposed deadline of December 31st for compliance with the Corporate Transparency Act, or CTA, requiring incorporated not-for-profit community associations to file a report online with the Financial Crimes Enforcement Network, or FinCEN. And that legislation was indeed well intended, but it's probably a broad overreach for not-for-profit community associations. But it's still very real and a government requirement, so we need to deal with it. So that'll be our first topic today. Another big deal is the new tool developed by Fannie Mae to help associations understand and address any necessary changes to their Fannie Mae eligibility. Following the tragic collapse of Champlain Tower South back in 2021, which was amazingly 3 years ago, Fannie Mae rightfully tightened up their eligibility requirements. Some associations got caught up in their ineligible or blacklist, making getting a mortgage for a home in the association rather difficult. And it was difficult to find out if the association had moved to that ineligible list and why. So that ineligible list should affect only a few of you. But if that's you, it's a big deal. Fortunately, we have some good news to share on that topic. But let's get right to the Corporate Transparency Act, or CTA. We're here to help. We're not your legal counsel, and we're not trying to sell you anything. We just want you to be well informed so you don't stumble or waste time going down any dead ends. So, Julie, what's all this fuss about?
Well, the Corporate Transparency Act actually just wanted to make clear that it doesn't apply just to HOAs, but HOAs, condo associations did get sucked up into that. And so what it requires is that, and Robert, is it December 31st or January 31st?
December 31st.
Okay. Okay. Anyway, but it requires that every single homeowners association, condo association, any sort of entity within our industry, they are required to, as a group, report on the status, like the name, the identification, and there's several other questions that are pretty invasive, especially for volunteers in a homeowners association, to upload to the government. So, I mean, you will have to, I don't know if they're accepting driver's licenses. They must be.
Yeah.
But
Driver's license,
but passports, yeah, that kind of thing they want. And it seems to me, part of this was because we're worried about money laundering, et cetera, et cetera. But as often happens in a ginormous government, one size does not fit all, but they think it does. So to that end, our National Professional Organization, Community Associations Institute, CAI, has actually filed suit against the government to block HOAs, condo associations, I'm just going to use community associations, how about that, as the general term, to block our industry and our community associations for being included in that. But as you know,
excise us.
But as you know, the wheels of justice turn very slowly, and I would seriously doubt if anything is going to happen until after this upcoming looming deadline. So all homeowners associations are going to have to comply with this. And there's information on that, but there are, and I just want to let everybody know, there are now third-party companies that are doing this for homeowners associations. And by the way, it's not just every annual meeting, it's every time there's a change in even one board member. Somebody gets hit by a bus, or they decide they can't do this, or they move, the whole board has to upload all that stuff again. And they do have companies that will do that for you. It's something like, the prices vary, but it's typically around $300 for the entire year. I find it interesting that, to my knowledge, and this has been, I've been talking to some management company people, obviously this is a big deal. The lawyers are not particularly getting involved in this. They're advising you to go to third party. So it's a pretty big deal. And Robert, you want to add in on that? Because I could just go off on this.
Yeah, well, there's, from a big picture point of view, association reserves, we're a corporation. We had to comply.
Yep,
so we had
too.
to submit all our information. And I have a friend who I'm trustee for his estate. And I'm meeting him for dinner tonight. And I'm bringing my driver's license and all that kind of ID. It's just what we do in this country to be defined as who you are. We're going in front of a notary to get a bunch of stuff done. So it's a government, as you said, trying to make sure that who's responsible for what. And I don't think there's a whole lot of money laundering in this country going on through the average community association. I think we got more down-to-earth problems like, what do we say, pets and parking and
yep, that's
policies,
right.
things like that,
Yep.
which is why we have this podcast. But again, why we have this podcast is because, yes, the association needs to comply. And there's a lot of people that are nervous about giving this information out. Another, from my point of view, is I have a son who's in the military. He shares my name, and he has reminded me that there is no such thing as privacy anymore. You kind of need to let that go. I want to hold on to it as tight as I can. I don't want to let it loose out there, but we need to be responsible adults. And the biggest trick I learned about this Corporate Transparency Act is it's kind of two levels. One is the organization needs to comply, and then the board members, Julie, as you suggested, need to be listed. And the key that I keep hearing in solutions is you as an individual can simply log on to the FinCEN website and deal directly with them, give your private information to the government, which they probably already know, your driver's license, your social security number, all that kind of stuff. And they give you a FinCEN ID. I don't know, 7-digit, 12-digit number. Think of it like a social security number, another social security number for people involved in corporations. And then you give that to the CTA compliance officer at your association, whether it's your manager, and they are not looking at your driver's license. They're not looking at anything else. They're just listing you as 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 on Happy Villas HOA. And that is a reasonable step of compliance. It gets really complicated. I wish Kevin was with us because it gets complicated because he sells Directors and Officers Liability Association. What do you do if you have, I don't want to say a stubborn, let's say a privacy sensitive board member who just doesn't want to comply? Do you have to kick him off the board or her off the board because that takes the association into non-compliance? Yeah, it gets kind of sticky when you get down into the weeds of a well-intended board member who we're talking to here, who just wants to help their association. Am I now? I've gone off on a rant.
You know, Robert, the thing is that we should talk about, and I do wish Kevin was on here. Hopefully he'll get on. But there are penalties if you do not do this, and they are not small. I don't have the numbers in front of me. Do you have them, Robert?
I thought it was, a penalty of up to $5,000 for each violation. And so I'm not sure if that's per the association or per the individual, but or per
Yeah.
day. I don't know, but this
no,
is
I think one of those is per day. I think it's
yeah.
$591 per day, not to exceed $10,000. And I believe
Yeah.
there's potentially jail time.
Yeah, there's a potential
Oh,
criminal
Kevin's
penalty.
there.
Kevin,
Kevin's here.
do we have your audio?
Trying to find it right now.
There
we
he
go.
is. You're
Okay.
on.
Okay.
I'm here.
Okay,
Okay,
ask
good.
Kevin.
Were you able
Okay.
to hear our discussion so far?
Not at all. Not at all.
Okay.
It was,
All right. So we'll pretend you
live,
just
people.
joined the podcast late. Julie and I have introduced the idea of the CTA and how it's a matter of registering the association and individual board members. They are
Yes.
outside third parties. It may be the sweet spot for each board member to individually get their FinCEN ID number and then simply give that to the CTA compliance officer at the association. We wanted to hear from you. You just did a webinar on this subject last week or 2 weeks ago.
Yeah, a couple of weeks ago. Yes.
Okay.
Yeah.
So tell us more. What do association board members need to know?
All right. This is really very, very challenging because the boards of directors right now, by January the 1st, have to give personal information to the CTA, which is part of the U.S. Department of Treasury. Okay. You need I think the names, date of birth, addresses, unique identification number, photos, identification number, and you have to do it right. You have to get it done. Now, CAI is trying its best to get community associations excluded from it, and they may be able to do it. But if you don't, you have to do it by January the 1st because there is a penalty of $500 per day.
Per day, yeah.
Per day, $500 per day, and criminal penalties of $10,000, or up to 24 months in prison.
Oh,
now, Kevin,
for being a volunteer board member.
Yeah. So,
Yeah.
Kevin, is that's per person, right? I mean, it's for the individual. Yeah.
Yep. Yeah, it has to be. Yeah. Because the person who does it complete it. So so it's $500 per day. So it's number one problem I've been hearing about for the past several months now, because the board members are not willing to do it. They don't want to comply. They don't want to give the kind of information out because of obvious reasons. So it is a significant problem right now.
Okay. Let's take a quick stop here. I think we've defined the problem, but at this point in time, let's take a. Now I can't talk. It seems like a good time for a break, and that'll allow us a commercial opportunity and for our audience to catch up if they have some questions for us. Jen?
Absolutely, Robert. All right, everyone, here's a quick word from one of our generous sponsors.
Numbers matter, and we need numbers like game scores and bank balances to let us know where we stand. The same is true for your association. Is yours thriving or struggling? Let me introduce you to the FIFO Health Score, like your own personal FICO credit score. Now in one simple number, owners and boards can learn the combined financial, physical, and operational health of their association. The good news, it's free at ourfifo.com. That's our, FIPHO.com. Learn how your association measures up.
One, two, three. Fantastic.
There we are. Yay.
And we're back. Okay, so we've defined the problem. There's a December 31st deadline. We have to have this done by then. A new set of rules starts on January 1. There's some hope in the background, but knowing what we knew about the government and an election that we're midstream on, can we hold out hope that lawsuit from CAI will magically exempt us? Or do we need to move forward and just comply?
I would say, Julie, is that you don't have a really choice right now. You have to comply, because the problem, if you don't, is a couple of problems here. Let's say that, the odds of you being fined and going to jail, you one of those people who says, look, they're never going to catch me. It's not going to be a big deal. These things become a big deal when somebody in the association finds out you haven't done it. That's where the problem comes into play. Once a unit owner or a board member finds out that they did it, you didn't do it, that's when these things create a life of its own. And because all of a sudden, if I did it, I'm the board member, and you didn't do it, guess what's going to happen? We're going to be at odds with each other. And then next thing you at the pool, you tell them, well, guess what I had to do, and so didn't do it. Again, it creates a life of its own. So don't sit and say, well, just because there's fines and penalties, I never get caught, nobody's going to do it. That's not your issue. Your issue is the people who do it, and doesn't like the people who didn't do it. You agree with that, Julie, right?
I absolutely would agree with that. I think, and getting to the bigger picture of our industry, well, look at this. How many homeowners associations are there? 345,000, something like that.
Better part of 400,000, yeah.
Better part of 400,000, that's right. And how many are small self-managed associations that don't even know about this, have no idea that this is going on? They don't necessarily have general counsel, or they don't have, the ability to look this up. To me, it's just such a no-win for the industry. And it's a real no-win if you're trying to recruit new board members. I think this is going to put a crimp in that. It's hard enough as it is. But to reiterate what Kevin said, I've been talking to management company executives, and they are saying, yeah, nobody is responding to they've sent out all kinds of information, absolute crickets. And I, as a professional, it's like, as Kevin and Robert are as well. All three of us would say you absolutely need to comply. I have a corporation. I have to comply there. I'm running for the board where I live. I'm going to have to comply there. I don't like it, but your son's
there's a lot of things in life that we don't like.
Privacy. Well, if you are a TSA approved flyer, I fly a lot, so I can skip the having to take your shoes offline. They have everything on you already, and I don't like it. But it's where we are.
Yeah.
Let me give you another issue.
Go ahead.
Yeah, go.
Yeah, let me give you another issue that is interesting because what we're seeing now is people moving outside of California, moving different states. Okay, a lot of people from California is moving into Texas or Idaho, Arizona, Nevada, and what they're doing, and what I hear is about they're bringing their California values out there. Okay.
Sorry, everybody.
I know, but guess what that means in reality? That means you go to these board meetings and you live in a community association like in Idaho, right? Mm-hmm. You live in Idaho right now, and you go to a board meeting, you find out they're doing things that, wait a minute, we would not do it that way in California. And first thing we do is say, guess what? From now on, you have to start passing these laws a little bit better, or you have to discipline a little bit better. You have to pass these laws a little bit better. And what happens is that in Idaho, they'll say, no, we don't need to do that. They don't do this kind of stuff here. We don't sue there. So the problem is that you don't live in a vacuum anymore. And you think just because you live in a town in Idaho or Arizona and Nevada, and we don't do that kind of stuff there, that the population is expanding. And people from California are used to obeying the rules and regulations. They believe in enforcing the documents. They believe in the laws that are out there. And so when you go to a place and you all of a sudden say, well, guess what? You have to comply with CTA. And that, again, these are the issues that the board members have to understand. It's bigger than just saying complying with the law. Certain things you have to do to stop yourself from having a bigger problem. And not so much as the fines and penalties, but it does bring a problem to your association. Because if you do it and you do comply with the law, guess what happens? You're okay. You don't have any problem. And if you say this rule, I'm not going to apply, then guess what happens to the next one, and then the next one, and then legislation comes past. Next thing you know, your association not compliance with anything.
Kevin, does the association itself as an entity have liability if the board members don't comply?
Yes, they have a bigger one versus, again, if you do comply and you get sued, you can say, guess what? I'm just following the law. The Department of Treasury says I have to do it. I'm doing it. There's a lawsuit there, but guess what? I spent $5,000 in defense costs, and insurance will come in and pay for it. You got an insurance policy, I'll take care of you. Now, as a board, we say, we're not going to cover it. We're not going to comply at all. We have 10 members, 9 members, and we refuse to do it collectively. Okay? Happens that you had that one person association. No, it's your job to comply, just like it's your job to make sure the trash cans are taken in, after 48 hours. The same group of people, the same guy who says you're parking in visitors parking, same guy who says your desk too big, the same guy going to say, wait a minute, what are you complying with? I am going to force you to comply with CTA. And then once you say take you to court, what happens is attorney will say, well, guess what? It's easy money for me because you're not in compliance. So as soon as you say to any attorney that I have a problem with the board of directors because they're not in compliance with CTA, any attorney would take it up because guess what? They make money out of it now because of something called prevailing party fees. So as soon as you do it, I'm a lawyer. I'm a jump on it, and now all of a sudden lawyers are making money because you failed to comply with the CTA.
Kevin, I have mixed feelings on that. Number one is clearly it sounds like you're giving instructions for how people can sue the association. No, you didn't hear that from us. What we want to do is encourage you how easy it is and how right it is to comply. I think that's the message that we want to get across.
And I agree. Go ahead, Julie.
I was going to say, and the truth is, people out there, if you know me, you know this really sticks in my craw. However, I'm going to have to comply, and I don't like it. What can I tell you? But it is what it is, and it's not going to be easy for us as an industry. But as board members, we have no choice, and I'm going to do it, and I don't like it, but it is what it is.
Yeah. I mean, my example there is what happens. And what happens in the community association is that if you do your job you're supposed to do, if you act within your fiduciary responsibility and you get sued, you don't care. I mean, you really don't care. As long as you have insurance to take care of you back it up. The issue is if you don't comply, whatever rules, whatever laws we have out there on the books, if you don't comply, that's when you get in trouble. And that's when that goes down that slippery slope. So the easiest thing to do is comply, because at the end of the day, by giving them those information, what are the consequences? What have you lost?
Well, I would also argue that you're not fulfilling your duties as a trustee if you don't comply.
Yes. Mm-hmm.
Yeah. And
hosts.
Jen, one comment then before.
All right. We got some looming questions over here.
Okay.
I have grown comfortable with the idea that privacy is an illusion, and you don't want to make a mountain out of a molehill. The government already knows all about us. As Julie said, I got my TSA qualification. Mm-hmm. I file my taxes. I've got a clear designation going through the airport security.
You got a passport?
I've got a passport.
Yeah.
It's what you do to live in this ordered society. And this time it's a pain, but it's just one more of those things that we do to live in this ordered society.
Yeah. And
usually the government takes really good care of us. At this point in time, I think they may have overreached, but that's too bad, so sad.
At the moment. Yeah. But as an industry, I want to let everyone know, as an industry, our professional organization is working on this on our behalf.
Yes. Jen.
All right, hosts. So we are covering CTA right now. So we have a couple of questions. Audience, please feel free to write your questions into the chat. All right. I'm going to pop us over to Q&A. All right. So we've got Jane asking here, we are an unincorporated association in Massachusetts. Does the law apply to us?
That's probably a better question for an attorney, but my understanding is from everything I've written.
I'm going to say yes, it's going to be, you still have that duty.
Yeah.
But definitely seek counsel.
Yes.
You know what? That's one thing we have to say up front. We're not attorneys at all, so we can't answer any legal questions. However, though, to be on the safe side, yes, the answer is yes. This is a matter of just be safe than you are. You're better off doing than not doing it.
Yeah.
Fantastic. All right, we've got another question here from Hyde. How do I contact FinCEN as a board member?
I have links to the association's portal to register the association. I have links where board members can go to get their FinCEN ID. Jen, can we put those in the show notes?
Show notes,
yeah, we can definitely do that.
We'll do that. Okay.
All right, fantastic. All right, hosts, I'm going to pop you back into your talking time, and then we can start talking about some Fannie Mae questions.
Cool. Okay, I want to go through. Oh, I think we've pretty much covered most of our information. The hints: have a CTA coordinator for the association to make sure it gets done. Individual board members register personally with a FinCEN, so you don't have to give your passport or driver's license or that kind of stuff to someone else. Julie made it very clear, though, that there are professional organizations that handle this for you for just a few $100s. If you want to go that direction, you don't want to touch it, you can do that. So that's a fantastic thing about our country, is that when there's a need, someone rises up to fill it. And one thing I read that I thought was a great idea was add having a FinCEN ID to your requirement for being a candidate for a board member. So you don't end up electing a board member who's going to refuse to comply. Yeah.
Yeah.
So
yeah. That's a yeah. That's a two-edged sword, but I would have to agree.
Yeah.
Robert, I'm going to say there's one thing. I see one question here in the chat. Someone asked if a manager files there is no fee. I would say the managers typically will not file. The management company will not take that liability on.
Yeah.
And so just like your attorneys won't. So if your company does it and or your person works for you directly and you want them to do it and they do it, there you are. But no, I think you're going to have to file your own. I'd recommend it anyway.
Yeah. Okay.
Sorry.
No. This is all good stuff. And this is what we're here for. As Kevin said, we're not your legal counsel, but we want to provide some clarity to help you as you lead your associations forward. And this is a big deal.
It's a huge deal.
We want to make sure that we have encouraged you to comply, because I really doubt that the deadline is going to be dropped at the last minute. And you don't want to be waiting for that call from, well, what do we see in the movies and TV? The call from the governor at 11:30 at night. So let's not wait for
execution.
Yeah, let's get it done. Let's get it done, folks. Okay.
Yeah.
Fannie Mae. Okay, every association, every condo association should be Fannie Mae and Freddie Mac qualified. It's good for mortgages. It means that the people wanting to get a mortgage in your association get their preferred rates. And when you get preferred rates, meaning low interest rates, that means the buyer has more margin to pay more for the unit. And so it basically does a good job of driving up home values, which everyone living in a community association likes. We all want our home values to appreciate. So being Fannie Mae and Freddie Mac approved is a good thing. There were some associations that got stuck in the Fannie Mae blacklist, and it was almost a black hole of how did we get here? How do we get out? And the big announcement, it was think about a month ago, was Fannie Mae announced that they have a new portal. And we will have a link to that in the show notes. Basically, they have a new tool, and you need to be a manager or board member. It is going to ask you for your qualification, but it connects you right to Fannie Mae staff, and you can ask about your qualification situation. Are you qualified or not qualified? And if not, it connects you to the staff so you can address your situation. So there's no more, what do I do? That's a fantastic thing. Again, it should not affect most associations in the country. It should not affect very few associations on our podcast here today, but it's a great tool. It doesn't affect Freddie Mac. Freddie Mac serves a significantly smaller share of the market, and they do not have a black list. Clearly, there's approved and unapproved on Freddie Mac also. They track association status, but there's a shorter list of triggers that move you into unapproved on Freddie Mac. So the issue has been Fannie Mae. They responded with a tool, and that is great news.
Yeah.
So you can always log on and check your status, challenge your status if you do need to challenge it, and we'll have something like that in the show notes. Julie or Kevin, do you have any more to add on that?
Nope, you covered that one.
Yeah,
Okay.
that was good. That was
Okay.
good.
All right, back to, we'll let this go a little bit longer. I think we're a little bit over time, but fantastic information. are there any government credentials? Can you provide your military ID? Can you provide your clear
Your global entry. That's your
global entry
Yeah.
number, your passport number? And I'm
Nope.
thinking the answer is nope. Yeah, it's
Mm-mm.
FinCEN, because what is FinCEN? FinCEN is financial. Oh, I had it here somewhere. Center for Tracking Bad Guys is what it was.
That's the technical term.
Yeah, the technical term is tracking bad guys.
Yeah.
And community associations got caught up in this.
Yeah.
And we have hope that this may be only this year, because one other organization was able to get its members exempted.
That was the Small Business Association, the National Association of Small Businesses. Now, the thing about that is really interesting, is that was a very narrow ruling. You had to be a member of that organization to be exempt as of like June of this year. Okay, so if you want to join now and go, oh, I can get in on that, you can't for small businesses. So there is some chatter about if CAI is able to get this and get us accepted, you might have to be the association might have to be a member of CAI. And we don't know that, but based on that other narrow ruling, it's always a possibility.
It's a risk. Yeah.
It's a risk.
And again, we don't want to be crossing the December 31st deadline, double crossing your fingers that CAI's stay of execution gets passed and it applies to all associations. It may only apply to their 40,000, 50,000 association members across the country. So we have hope, but the hope is a small bubble, not a big bubble.
At the moment, yeah. Oh, and by the way, Robert, it's the Financial Crimes Enforcement Network.
Thank you, Julie.
And I want to thank Jen. No, I want to thank Jen for that. Thank you, Jen. Off-screen Jen.
Our researcher.
Yes.
Okay.
Thank you. We have another question here, and then I think we need to start to wrap things up.
Sounds good.
All right. Lee is asking, we are on the Fannie blacklist due to roof insurance in Colorado not being available at 100% replacement costs.
You know what? I knew it was going to come up. I knew it. I kind of took a pass. Okay. Right now, in terms of Fannie Mae, there's a problem between Fannie Mae, Freddie Mac, and an insurance company. Fannie Mae and Freddie Mac had guidelines that said, this is what we need from your insurance provider. Now, what happens historically, they were never as strict as they are today. They've gotten really strict and make sure that you comply with all their guidelines. So they have 5 guidelines. They make sure you apply to all 5 of them. Now, the problem is that the insurance carrier does not care what Fannie Mae or Freddie Mac wants. They don't. So what happens is that it's a perfect example of what happened, what you just said, is that what Fannie Mae are saying is that you have to have something, you get replacement costs. So if you have a $50,000 roof, you should get a $50,000 check back, okay? But when insurance people are saying, wait a minute, if your roof is 15 years old, if it's 16 years old, we're not going to give you replacement costs. We're going to give you actual cash value. So the actual cash value of a 20-year-old roof is not the same as replacing that roof. Exactly. There you go. And that's the problem right now. That's one of many problems, is that insurance companies are making decisions. Another thing, they're making a decision that you can't have high deductibles. And guess what happens is, because these associations leak water. And so they'll put in a 10, 15, 25,000 deductible on water damage. And Fannie Mae and Freddie Mac saying, no, you can't do it. So right now there is a huge problem with between Fannie Mae and Freddie Mac and insurance, because insurance, as you can know, the rates are going higher. And that means you're having less coverage and higher deductibles. They do not comply with Fannie Mae requirements. So we talk about higher deductibles and lack of coverage and different coverage. That's the issue. It's not the higher. They don't care about the premium being raised. They have a problem with you changing terms and conditions of the policy. As you know, right now, especially you live in California or in Florida, where there's wind and there's fires, the policy has changed and they no longer are in compliance with Fannie Mae and Freddie Mac. That's the issue right now. And what we're doing in the insurance industry is sitting down with Fannie Mae and Freddie Mac and saying, can we work together? Because insurance carriers cannot continue to write the insurance the way you want it written. And that's it in a nutshell. So I kind of hid myself and then we say anything else we're going to talk about, and but it popped up.
Yeah. Well, Kevin, isn't that the natural thing to happen? We've had two major upheavals in this country. We had the collapse of Champlain Tower South in 2021, or three. We've had COVID.
Yeah.
We've had the associated supply chain disruptions and cost increase that drove inflation. So we've got a lot of unsettled things. And when things unsettle, then you get this confusion where we have to make adjustments, and the adjustments haven't quite fit together yet. So,
and the problem is that Fannie Mae and Freddie Mac are looking at the same terms and conditions they did 5 or 6 years ago from an insurance point of view. Now, they may have changed in terms of reserve study or structural integrity, but insurance, we want these 5 things, and those 5 things have to be perfect all the time. And what happens is, as we're learning, that insurance says we can't make money giving you those 5 things. We can make money giving you 2 of those 5 things, but not 5 of the 5 things. And it's a big problem. And somebody brought it up. And it's if you're not experiencing a problem today, you will experience a problem over the next year because they will change. Insurance will continue to change. I mean, you had the hurricanes in Florida. You had 2 back-to-back. You had North Carolina. Insurance companies are looking at how much money they're going to lose. And as a result of losing that, they have to figure out how they're going to make money, how they're going to survive, how can they continue to be effective and continue their operations. So good question.
Yeah. Fantastic. Well, thank you to our audience for hanging with us. Kevin and Julie, it's time to wrap up our conversation today. Kevin, you've given us some closing comments. Anything to add to that? Be patient.
Be patient. Be patient. Yeah. That's what it is.
Yeah. As you've said many times, lower the temperature. We're in a time of disruption, but it's going to get better. Julie, any closing thoughts?
Well, the only thing I want to say is to the board members out there and the potential board members, do I like it? No. But my recommendation as a professional in the industry, also going to be a board member again, is you have to comply. So we're just going to have to bite the bullet and do it. I'm sorry, but it's the truth. So I want to see everyone doing it.
Yeah. Yeah, I think that's the bottom line here. Okay, to our audience, thank you for joining us today for another one of our special live stream episodes. We hope you learned some HOA insights from our discussion today that helps you bring some common sense to your common area. We look forward to having you join us for another great episode next week.
Thank you.
Thank you.
You've been listening to HOA Insights, common sense for common areas. You can listen to the show on our podcast website, hoainsights.org, or subscribe on any of the most popular podcast platforms. You can also watch the show on our YouTube channel. Check the show notes for helpful links. If you like the show and want to support the work we do, you can do so in a number of ways. The most important thing that you can do is engage in the conversation. Leave a question in the comment section on our YouTube videos. You can also email your questions or voice memos to podcast@reservestudy.com or leave us a voicemail at 805-203-3130. If you gain any insights from the show, please do us a huge favor by sharing the show with other board members that you know. You can also support us by supporting the brands that support this program. Please remember that the views and opinions expressed by the podcast do not constitute legal advice. You'll want to consult your own legal counsel before making any important decisions. Finally, this podcast was expertly mixed and mastered by Stokelight Video and Marketing. With Stokelight on your team, you'll reach more customers with marketing expertise that inspires action. See the show notes to connect with Stokelight.